The market stats are in for the Southern Georgian Bay region, and today we're going to dig into those stats and see what's really happening in our market. Real estate sentiment seems to be at an all-time low right now, with the media constantly talking about a real estate crash, rising interest rates, etc. But are things actually as bad as they're portraying them to be? Well, we're going to find out today. So let's start with a quick summary of what happened in 2022. The first couple months of the year followed the trend that we saw during the pandemic. Rapidly escalating prices, tons of activity in the market, buyers fighting for property, multiple offers, etc. Now, Bank of Canada entered in an effort to try to curb demand, cool the housing market, and get a hold of inflation. The Bank of Canada started aggressively raising interest rates, and it worked. Buyer demand fell off a cliff, and that lack of demand put a ton of pressure on prices in the market. So although we saw a huge run-up in the first couple months, most of this run-up was wiped away in the second three quarters of the year, leaving us with a pretty flat year over year. Now we're going to dive into the specific numbers, but I would say hot start to the year, very slow middle, and a little bit of life in the latter half of the year, but overall, pretty flat year over year. And now we've returned or normalized to some numbers that are more what we saw pre-pandemic. So let's dig into some of the specific numbers here. So one of the important things we must keep in mind when we look at the data these days is to understand that the pandemic years were really outliers in terms of Canadian real estate. So I'm going to look at some of these stats with a little bit broader lens and compare it to a pre-pandemic year of 2019, which in and of itself was a record year. So probably represents a more normal year, normal good year in the market. So let's start with unit sales. So unit sales, like the number of homes that sell in a year, were down 38% year over year in our region for 1,648 total homes sold. But if we compare these unit sales number to 2019, we were only down about 19%. So that's a pretty good benchmark. So certainly down, but not down that much in terms of the number of houses that would have typically sold during a pre-pandemic year. Now, Q4 sales, though, December in particular, were down significantly. So we're down 41% year over year in Q4 and 30% down compared to a normalized year of 2019. Expired listings, as you would expect, were way up 225%. Obviously, houses were staying on the market longer because of lack of buyer demand, and so many listings came to terms and expired. Now, surprisingly, average price year over year in our region were up 11%. So what we saw here happen is a huge run up in those early months of the year. Those gains were wiped away in the latter half, but it still left us up 11% at an average price of $977,000. Now, keep in mind, this is the whole Southern Georgian Bay region, so our micro markets are a little bit different. So I would say that this stat is a little bit misleading because most of the volume that happened in our market happened in the first half of the year. So that number is a bit skewed. Let's leave it at 11% up year over year, but we'll get into that a little bit later here in the video. Days on market were up significantly, 29% year over year to 27 days. But interestingly, when we compare it to pre-pandemic, we're actually still way down on days on market. So down 50% from what we saw in 2019 at 54 days on market. So where are we at right now in terms of our local real estate market? Well, I think we're down about 20% in terms of price from what we saw at the peak of the market back in February 2022. The average price stat year over year, I think, is a bit misleading because we saw so much of the volume of sales happen at the first half of the year. If there was more sales data points on the second half, we would have seen a lower average price point. So take that stat with a grain of salt. So I think we're down about 20%. I think we're going to continue to see some pressure on prices, at least in the first quarter, maybe into the second quarter. We're expecting the Bank of Canada to raise the rates again end of January and possibly another one after that. As long as they continue to raise rates, there'll be continued pressure on demand and price. I think once we see them signal that they're going to hold the rate or they've got a handle on inflation, that'll bring some buyer confidence back to the market, and we'll see a little bit of increase in activity. But look for 23 to be a year of normalization. I think we're going to get back to more pre-pandemic levels in terms of sales activity. So more of a balanced market. We're not going to see crazy multiple offers, etc. I think we're going to see conditional offers become the norm again, and just more balance in the market overall. Now remember, if you're a buyer, there's some great opportunities in the market right now. Whenever sentiment is at its worst, all of this negative news is a great time to negotiate an offer. Sellers watch the news, they know what's happening and the risks, so there could be some great deals to be had. Keep in mind, when stability returns to our market, so will all the other buyers and the competition. So if you're ready to buy, get out there. Don't be scared of list prices. Get out there, write some offers, and see if you can get a deal, because there will be some to be had in the next couple months. If you have any questions about this video or want some more specifics into the local market, reach out to us online at thekernsgroup.ca or me personally at mike@thekernsgroup.ca. See you on the next one.